Good morning everyone and welcome to Morning Markets on Monday the 15th of January. Today we'll look at the week ahead and what you can expect to hear from the True Potential investment team in Morning Markets. With 2 weeks into January, I think it'd be fair to say that most of the data from the US so far continues to support the relative strength of the US economy relative to other regions. We saw that last week with inflation slightly higher, but also employment better than expected. As we look to this week, there are a couple of other data releases that we'll be thinking about that will give a sense to that ongoing momentum in the US economy, particularly as it relates to retail sales, where we have seen consumer confidence remain relatively robust as well. We'll also get more detail in the breadth of the US economy with the publication of the Federal Reserve's Beige book, which tends to give a little bit more detail or insight into the regional aspects of the US economy. So certainly something of that will be of interest as we look to the week ahead. In the UK, I think we'll continue to focus in on the inflation report. Clearly we have seen that ongoing disinflation in the UK economy, and certainly we should continue to see that as we look to the data this week. Other data from the UK will be important as well, particularly as we look to unemployment and also retail activity. If we look to Europe, I think the market will focus in on the ECB's minutes from the December meeting, just to really look into and get a sense of any subtle changes in policy expectation. In Asia, it's very much all about China this week. We get data which will allow us to assess full year GDP. If we cast our mind back and we think about the target that the Chinese government have set, 5%, we'll be looking keenly to see whether that's achieved. And then we'll get the other data from China as we look through the week in terms of retail activity, employment and industrial production. Japan, very much about the inflation data that we get there, just given that ongoing movement that we've seen in recent weeks around policy, wage inflation and how the yen has reacted to some of these changes. Just looking to other areas that we'll focus in on and maybe not comment on, but certainly we'll be aware of, is the ongoing reporting from companies in both the US and across the globe as we get full year 2023 results releases. Just from this morning, I just wanted to also comment on data from China and interest rates. No change to the medium-term lending facility there, left at 2.5%. Some of us might have been expecting a degree of change there, or a reduction, primarily because of that weakness that we've often discussed in the Chinese economy at this point in time. We'll leave it there for today, but please do join us throughout the week. Many thanks.